The economic calendar triggered volatility in the US stock market on a Tuesday, revived optimism and enables the revision of the labor market and consumer confidence. Fresh macroeconomic data came as a surprise and drove a rally of the benchmark stock indexes. Today, the market found new pieces to the puzzle: the ADP employment report and the revised US GDP. Stock investors eventually signed with a relief despite the firm labor market. In this context, the S&P 500 closed with the strongest intraday growth during the whole summer. The Dow Jones grew by 0.85% yesterday. The Nasdaq jumped by 1.74%, logging the strongest dynamic. The S&P 500 surged by 1.45% to close at 4,497 points. The major stock indexes traded sluggishly in the New York pre-market with minor gains. Futures on the stock indexes inched up by 0.1 and 0.25%. The S&P 500 is expected to trade in the intraday corridor between 4,470 and 4,540 points. Wall Street rallied on a Tuesday thanks to the stocks of Tesla, Nvidia and other high-tech giants, because a decline in the US vaccines cemented the hope for a pause in the Fed's rate hike. The S&P closed with the sharpest intraday growth since June 2. The Nasdaq boasted the best intraday performance since late July. The rally was driven by JOLT's job openings report because the number of vacancies fell to 8.827 million in July. The report logs a decline for 3 months in a row, proving some signs of a weakness in the labor market. Besides, the actual figure was much lower than expected. Investors also digested the report by the Conference Board. The Consumer Confidence Index slipped to 106.10 in August, much worse than the expected 116. According to the FedWatch tool, Fed funds futures signal an 87% chance that the Fed will put interest rates on a hold at a policy meeting in September. There is also a 54% chance that interest rates will remain unchanged until November. Yields of 10-year treasuries dipped to 4.11%, whereas yields of 2-year treasuries again fell below 5% after they hovered at around this level for a few recent sessions. Falling treasury yields supported the rally of high-tech giants. Nvidia shares increased by 4.2% and closed at the highest level in history. Tesla shares surged by 7.7% even after documents showed the US regulator issued a special order to the electric car maker asking about changes to the driver monitoring system for its autopilot software. Nvidia and Tesla led Wall Street in terms of turnover, although trading volume was subdued and below the average. In addition, Alphabet shares rose by 2.7% on new AI technologies and the partnerships unveiled by Google's parent company. On Wednesday, futures for the stock indexes retreated into the red zone, but fresh data pushed the indexes to the buyer's territory, although the movement was muted. Such a movement of futures is explained by the dominant role of fundamentals at the moment. Investors will have to evaluate a number of other data, and today to see if there really is a chance for the Fed's tightening cycle to end. The IDP employment report today showed that the number of private sector jobs increased less than the market had predicted. Private companies hired 177,000 people in August, and the actual growth fell short of expectations of a 195,000 increase. The decline followed an upward revised figure of 371,000 for July. This month's numbers are in line with the pre-pandemic job creation, said Nella Richardson, chief economist at ADP. After 2 years of exceptional recovery-led growth, we are moving towards more robust wage and employment growth. The second estimate of the US GDP for the second quarter showed that the annual rate was slower than expected. GDP expanded by 2.1% versus 2.4% in the first estimate, and an uptick higher than in the first quarter. Besides, consumer spending rose by 1.7% in the second quarter, against 4.2% in the first quarter. Government spending also slowed down the pace of growth to 3.3% against 5% in the previous quarter. At the same time, fixed capital investment in the non-residential sector increased most significantly. However, experts saw the most significant decline in the second quarter this year since the first quarter of 2020. Importantly, today's data is a part of the puzzle, and reaction to it may be muted as the Fed's preferred inflation gauge comes out on Thursday. The US NONFARM payrolls will be available on Friday. Exactly these indicators will set the tone for the market in September and the next Fed meeting on September 20. The 10-year Treasury yield, which fell to nearly a 3-week low in the previous session, jumped to 4.15%, trading rise in major stocks, with Tesla leading the decline ahead of the Bell, falling by 1.05%. US-listed Chinese stocks also came under pressure as US Commerce Secretary Gina Raimondo said during the 3-day visit to the country that many US firms now view China as unsuitable for investment. Shares of PDD Holdings, JD.com, Baidu and Alibaba fell by from 0.5% to 2%. Amid worries about the country's real estate market and trade relations between Washington and Beijing. Shares of HP Incorporated plunged by 8.2% in the pre-market trading as the personal computer maker lowered its full-year guidance as demand slower. The US dollar is on the defensive today. Its index escalated its decline after the release of the US economic data, having dropped by 0.5%. The US dollar index is trading at 103 at the time of recording this video. The intraday Canada is seen between 102.70 and 103.50. On Tuesday, the US dollar index had the worst day in 1.5 months because the number of vacancies contracted to the lowest level in 2.5 years. This assured traders to lower bets on a further rate hike in the United States. Today, the index extended its weakness and erased its gains of August. The greenback lost ground against most of its major counterparts, but the biggest losses were against the euro, 0.46%, and the pound, 0.61%. The euro resumed growth as the higher inflation in Germany and Spain forced investors to assess the high likelihood of a rate hike by the ECB. Markets have raised their bets on the September rate hike to 60%. The hawkish comments of the Bank of England's policymakers continued to support the sterling. Obviously, both the rhetoric of the regulators and the economic conditions in Europe and England contrast sharply with the situation in the United States. So, traders' expectations for the Fed's further steps and fresh data put additional pressure on the US dollar index. The Canadian dollar is a beneficiary of the greenback's softness. The USD CAD traded at 1.3530 before the opening bell and 0.16% down. The intraday Canada is seen between 1.3480 and 1.3590. The loonie has been benefiting from the US dollar's decline for the second day. The extra support is provided today by rising oil prices, and Brent crude futures rose by 0.5%. While WTI futures added 0.6%. Both benchmark rates increased by more than $1 on Tuesday. Today, fresh data on crude oil inventories in the United States will be released, and crude stocks are expected to have contracted by 11.5 million barrels for the week. Apart from the prospects of a pause in the Fed's monetary tightening, and Hurricane Italia also affects oil quotes, the region, which will be hurt by the hurricane, accounts for about 15% of the US oil production and about 5% of natural gas production, according to the Energy Information Administration. The crypto market also had a clearly positive session yesterday, and Bitcoin rallied by 7%, the strongest gain since March. Today, the flagship crypto and most assets retraced from yesterday's highs. Bitcoin is now trading at 27,300.9% down. Binance is the only altcoin to have added 2.9% today. Popular altcoins went down. Ethereum, Solana, Ripple, Cardano and Litecoin shed from 0.7 to 3%. The crypto market and Bitcoin in particular cheered the news on the crypto industry. A US court ruled in favor of a crypto asset manager in the lawsuit of a Grayscale against the Securities and Exchange Commission. Grayscale has secured a positive settlement in a legal battle to convert its flagship Bitcoin trust into a spot Bitcoin exchange-traded fund. The U.S. Court of Appeals for the District of Columbia sided with the Grayscale and called the Commission's rejection arbitrary and capricious, handing the crypto asset manager a landmark victory. Both parties have 45 days to appeal their decision, in which case it will either go to the U.S. Supreme Court or be heard by the full panel. It's not yet clear if the Securities and Exchange Commission will appeal. As for the intraday outlook for Bitcoin, the asset is trying to hold above $27,300. If the token manages to resist the selling pressure, then the asset may again go to test the high of 27,900. An alternative scenario looks like a fall to $26,800. We strive to equip you with all relevant information for your wise trading decisions. Welcome to leave your comments and ask any questions, and see you online tomorrow.